All right, Isaiah, thank you for that. And I agree. What a crazy time to be working in Antarctica there. There's a reason I don't live in the north, and you saw that with lake effects now. It's the reason I don't live in Antarctica either. All right, we're going to go ahead and welcome in our next live guest. We've got Lauren Beagen joining us, the Maritime Professor. We've got a new update in the Bed Bath & Beyond and MSC case going on. And Bed Bath & Beyond kind of throwing down the gauntlet, $316 million in a lawsuit. Lauren, tell us what's going on and what this means going forward for a bankrupt company continuing to try to get money out of a big-time ocean carrier.
Sure. So this is the third of the Bed Bath & Beyond cases now to find its way over to the Federal Maritime Commission. So this one now, as you said, is against MSC, one of the ocean carriers out there. Again, this is minimum quantity commitments. This comes down to service contracts, and the complaint is that the ocean carrier, which previously was Yang Ming and OOCL, now MSC, what they allege is that they have been failing to honor their service contract commitments.
So with this, obviously we know this is now 3 out of 3 for Bed Bath & Beyond. What has been the progress in the other two so far? And have they set a precedent where they felt confident enough coming in for $316 million now for a third lawsuit?
Sure. So when formal lawsuits go to the FMC, they can take a while, as any lawsuit does. So they're still under legal procedure. There's been responses. They're going to start to go back and forth. There's some faster procedural things that can happen at the FMC, but when you go into this formal lawsuit category, as with many lawsuits, it takes a while. So those are still ongoing. I can imagine that as the administrative law judge that is reviewing these at the FMC starts to see I don't know if there's going to be more coming in, they might start to handle them similarly. Service contract commitments and minimum quantity commitments don't have a ton of case law here. So this is all kind of a novel thing. We saw this, one of the first marquee cases was the MCS versus MSC case, still ongoing as well. That one's under appeal. So we really don't have some slam dunk case law. So this is going to provide a new area of case law for shippers, depending on which way it comes out. If it comes out in favor of Bed Bath & Beyond, or if it comes out in favor of the ocean carriers on these minimum quantity commitments.
We know, of course, that Bed Bath & Beyond is now bankrupt as a company. They're not currently operating the same way that they were. All of their brick and mortar stores have been closed. For the most part, their inventory has been liquidated to overstock.com and is being sold that way now instead. And it's made us question multiple times, to now 3, why are they continuing to do this if they are a bankrupt company that's not operating? Are they just simply looking to recoup losses? Or if they end up winning, will all of the money that they do win end up going into legal costs? What do you think is the true rationale here? Is it just to establish that precedent and kind of flex some muscle, or are they legitimately looking for a big time payout that they think they will get from the FMC?
Yeah, so I mean, this 300 and it's tough to get lost profits, right? So that's why those numbers are so high. This one's certainly higher than the other two cases that they brought previously. Their creditors probably want them to pursue this because you can't get blood from a stone, right? So if they don't have any money, if they don't have any cash to pay off their debts, even before they kind of got bought up and sold again by Overstock, their creditors probably want some of this money. But there were a lot of emotions happening at the time. And I hate to kind of boil it down to that, but there's still shippers that are pissed about what happened, right? So they want kind of their justification. They want justice here. Whether or not they're correct in that, that's what the FMC is going to determine. But there were a lot of additional charges being thrown around. I mean, we know that it went from a normal Asia to West Coast $1,200 for a box to upwards of $20,000. I even think I heard $25,000 for that exact same box. That's a lot of money, and that really, I mean, potentially, at least partially, put Bed Bath & Beyond out of business is what they're claiming. So that can have larger effects, but also, I mean, if you look back, you just want to right that wrong if you feel as though that's what that was. So I think that it's probably pretty emotionally charged. I think they feel like they're going up this David and Goliath moment. They're going up against these bad guy ocean carriers. I've said it before. I don't think that the ocean carriers were necessarily bad guys. And I think that the FMC is going to determine when and who made perhaps wrong decisions along the way. It might have been that the ocean carriers weren't making as many wrong decisions as the shippers are saying. And also during COVID congestion, the FMC came out and said that there was still significant competition in the market. And so that plays a major effect as well as just saying that maybe the ocean carriers weren't as bad guy, but maybe they made a couple of bad decisions. That's what this case law is going to help determine.
So let's flip this from the perspective of MSC and then the other carriers involved in these cases. If you're a carrier that hasn't been sued, whether it's by Bed Bath & Beyond or by any other of your shippers that you were servicing during this time, are you now sitting here watching this, seeing Bed Bath & Beyond come forward and really just throwing out the lawsuits? They don't really care. They're just doing it, right? Are you sitting there and are you worried that you could be caught in the crosshairs if you are maybe a carrier who knows that they did a little bit of some shady business, they're just waiting to get called on it?
Well, so I don't think that there's anything that can really be done now, right? And so it really comes down to these minimum quantity commitments. So these are service contracts. So essentially, you promise a certain amount of cargo movement for a certain discounted rate. These are confidentially filed, but they are filed with the Federal Maritime Commission. So in theory, the FMC is kind of watching all of these service contracts. Now remember, the FMC is not responsible for making sure that you're good at negotiating good deals, but they are responsible for making sure that there's still fairness, that the ocean carriers or the shippers are fulfilling their end of the bargain, right? So these are contracts, essentially. These are service contract commitments that either side is supposed to be responsible for, either the amount of cargo they're moving or the rate. And so what was happening in kind of these series of Bed Bath & Beyond cases is they're saying, look, we had determined this preset amount of cargo we were going to move at this rate. And what they're alleging is that these ocean carriers that they're filing against were pushing them over into the spot market in order to get any space available when they said, look, we already contracted with you. We were supposed to have space available. So what this is going to come down to is it's not necessarily a specific action or a specific time period. It's sometimes over the course of the year, so many boxes can be shipped, or sometimes over the course of a month. But it's not like on November 29th, you have to ship 50 boxes. And so it makes it a little bit imprecise on, well, can you force the action or can you say, well, you didn't ship on this day? It's you didn't ship on this month.
So obviously we know since all of this has come to light and since Bed Bath & Beyond has had those major struggles, we have seen just an absolute implosion of ocean rates. They are nowhere near what they were during the times that we were seeing shippers struggle so much to secure that capacity. As we go forward, how much more do you think of a pressure this puts on the carriers, knowing that they're not able to charge that obscene rate that they were before and that they have to both honor now those service commitments and the prices that are in those contracts?
Yeah, so I this is definitely putting a strain on the ocean carriers for sure, but not unexpected, right? We were saying at the time, look, it's pendulum swinging up to the 20,000 per box, but then it's going to swing back, and so now we're seeing it swing back. It will swing back to the middle. It's going to start evening out. The question is, are we going to lose some ocean carrier companies in the meantime? We saw Hanjin go bankrupt in, what was it, 2016. And that's right around the time when ocean carriers were forming alliances because they needed to share that space, vessel sharing agreements to provide better rates, better availability of cargo, and just kind of better routes for the shipper. I mean, to provide that good service to the shipper. So I hope we don't see some of these companies go out of business, essentially. What we are going to continue to see, though, is we have a lot of vessels coming onto the market, that were bought up with all of these high profits. And nobody was more surprised by those billions of dollars of profits than the ocean carriers themselves. I don't think they saw that coming at all. But we're going to start seeing more vessels, which means more capacity, which means more available space, which when rates are low, it's only going to continue to cause that to go lower. But the other side of that is we have a lot of old vessels that are about to come out of service. They're going to start getting scrapped. And so that will help balance out that cargo space, that capacity in the market. So it's going to be interesting for another year or two, perhaps further out, but it's certainly going to be kind of volatile in the next year or two. So, a shipper right now, it's all about relationships, right? It's all about making sure that maybe you're not taking advantage when the ball's in your court. So making sure that you maintain the long-term vision here, because it will come back around, and it's just important to know that this is a pendulum. It is swinging, and it unfortunately it's going pretty low on the other side, and we need ocean carriers, right? Otherwise you can't. I mean, I guess you could, but like, who's going to rent a big vessel and start moving the boxes themselves?
Absolutely. And you don't want to be on that headline that goes record profits to sudden bankruptcy. Lauren, thank you for joining us this morning. Great to hear from you as always.
Thank you.
All right, we're going to go ahead and take a quick break. We'll be back with more FreightWaves Now right after this.